So this is the 2019 examcraft mock um, cash flow statement. So um, what we need to do really is look at the bottom and use all this information to find out the last remaining sort of numbers that aren't that we need to find out. So the first thing is the taxation due was paid during the year. So what that means is the taxation paid, and I'm going to write it down here. My taxation paid has to be whatever taxation due is left at this year, because if that was due at the start of the year and that's what was paid, well then whatever's due at the end of the year has to be, sorry, my taxation expense has to be whatever's due there. So 43,000 there. Okay, so when I come to do part A, that 43,000 is the number that's going in. Second one, the issue of debentures took place on the 30th of the 6th. Now, debentures is our cue to do our debenture interest. So we look at our debenture interest, and it's telling us that the issue of debentures took place on the 30th of the 6th. So we didn't have the extra 50,000 until the 1st of June. So the debentures are 8%. So it's going to be 8% of 250,000 for the first 6 months of the year. So 8% of 250 by 6/12. And it'll be 8% of 300,000 then for the remaining 6 months of the year. So the total debenture interest expense for the year is 22,000, and that'll be the figure we work off for that. So next one then, revaluation. Jesus, took place in relation to an increase in land. So I have never seen that before. So we'll just have to leave that there for the time being. Okay, so let's see what this revaluation is about. So we can see there's a revaluation reserve there of 25,000. Now, what I'd suggest that is that a bit like when we sell off land and buildings, that our land and buildings at the start of the year, this number here, 400,000, originally that was this was 400,000, and it was revalued up to 425. So this 510 is 25,000 more. So what I would do there is I'd take that 400,000, and from that I would take away the 25,000. I'll come back to that. I need to have a little think about that as we go, because obviously the revaluation of land would come away from that to 510,000 as well. So let me just have a think about that, and I'll come back to it. But I'll just make a note of that. So again, that has never been in a. It certainly hasn't been in a leaving cert question before, but I'll be able to work it out as we do it. So next one then, total depreciation charge for the year was 19,000, and that's going to be important. So the depreciation charge is 19,000. So we should be able to work out then around the other ones what the profit on the sale of this plant and machinery, this next one was. So it should give us, so there was no disposal of buildings during the year, but an extension to one of the buildings was built. So what we can say is that from that the depreciation on land and buildings is the difference between the 18,000 and the 27,000. So it's 18 and 27. The difference between the two of those is 9,000. So that's the depreciation on the land and buildings for the year. That means that the depreciation on the plant and machinery has to be 10,000. And we'll see why that's going to be important in a bit. It has to be 10,000 because the total is 19,000. So 19,000 minus this 9,000 that we just worked out gives you the 10,000. Okay, and we'll see that'll be important on the profit on the sale of the assets in a minute. So, uh, plant and machinery, which cost 60,000, was sold for 46,000. So we don't really know. Well, we'll be able to work out in a minute what the profit was, but what we really need to do there is take this 60,000 and take it away from the 286. So I would cross out that 286 and turn it into 226. But obviously I can't do that here, so I'll just do it as a working. So plant and machinery in 2012 or 2017, sorry, would be 226. So that's 286 minus the 60,000 that it had cost. We don't, as of yet, know what the depreciation on the van we sold is, but we can work it out because we know that the depreciation charge for the year was 10,000 on the machinery. So if it was 68 here and there was no disposal, it would go up to 78. So the depreciation on the van we sold, or in the plant sold, has to be 68 up to 78. So it will have to be 78,000, which is what it should have been. What it is 54,000. So if we just take them away from each other, you will get the 24,000 on the for it to be the depreciation on the one that we sold. So again, what does that all mean? We now know that the plant that we sold at cost 60,000 had a depreciation of 24,000. Therefore, it had a value of 36,000. If it had a value of 36 and was sold for 46, we'd have made a profit of 10,000. So the profit on the sale is the value is 60,000 minus the 24,000, which is 36,000. You got 46,000 for it. So therefore the profit has to be 10,000. You got 46,000 for something that was worth 36,000. Okay, so that's that done. There's a lot of, let's call it, tricky stuff. There's a lot of things in this one where you have to do a little bit of thinking about. So next up then, the where am I? The goodwill has been amortized over 10 years. So just look at your goodwill. It's gone from 70,000 down to 63,000. So you don't really have to do anything with that. Just note that goodwill written off. It's written off over 10 years. So 70,000 divided by 10 is 7,000. Okay, or the difference between the 70,000 and the 63. Dividends paid during the year were 17,000. Again, just make a note of that maybe. Investment income received for the year was 4,000. Again, you can just make a note that that's what you've received, and you don't have to do anything with that. So we can start putting our numbers in now. Again, working at this in order. So first one is our abridged profit and loss account. Now remember that goes backwards. So you start at the bottom. So the profit and loss balance was 100,350 at the end of the year, and at the start of the year it was 7920. Which means that you must have made a profit of the difference between those two numbers. Sorry. Which would be 29,430. Okay. The dividends for the year, I think they were given to us. The dividends for the year were 17,000. So some number minus 17,000 is 29,460. So that's 46,430. Taxation. Now, remember we worked out the taxation as the expense is 43,000 because it's through that we paid what was due at the end of the year, which means we haven't paid anything to do with this year, which means that must be what this year's expense is. So some number minus 43 is 46. thousand. So add that up. So that's 89,430. The debenture interest we have worked out to be is it 22,000? Yeah, 22,000. And the investment income is 4,000. Doesn't tell us any percentage on the investment, so we have to assume that that's the full amount. So some number plus 4 minus 22 is 89. So that'll be 107,430. And that's our operating profit. Okay, so we can drive on. So we put that 107,430 into our part B. And then we look at our depreciation charges for the year. So the full amount of depreciation is given to us. We use that to work out the profit on the sale. So the total depreciation charge for the year is 19,000. Now that's a non-cash expense. So remember with these, we always add on non-cash expenses. Goodwill is another non-cash expense. Goodwill written off, 7,000. So that gets added on. Then we have the profit on the sale of the building. Now, the profit was 10,000. Remember, profits are non-cash gains, so we have to take those away. So non-cash expenses we add on, non-cash gains we take away. Bad debt provision. Now, they didn't actually give us the answers here, so we have to go and work these out. So you see here that debtors less 4% provisions is 33.6 and 38.4. So we really need to work out what the debtors and the bad debt provisions are in these. So because we're going to use those numbers. So it wouldn't actually make a difference if you didn't do this, but it'll make a difference to your marks in the marking scheme. You're expected to show bad debt provision separately. But debtors less bad debt provision for the 2018, the debtors less the bad debt provision is 33.6. So we take the 33,600, divide it by 96, and multiply by 100. The exact same as in tabular statements. So the debtors is 35,000. If the debtors here is 33.6, then the bad debt provision must have been 1,400. We'll do the same for 2017. Take the 38.4. We're going to divide that by 96. And multiply it by 100, and that's 40,000. So that means that must have been 1,600. So there's a decrease in bad debt provision of €200. Now we know a decrease in bad debt provision is a non-cash gain. So that decrease would be added onto your profits. So it gets taken away in your reconciliation statement, sorry. Now stock, this should be the one that makes most sense. So stock has gone down. If stock goes down, you've sold more stock, cash goes up. So when stock goes down, cash goes up. That's what you need to remember. So stock has gone down by 8,000. So cash has gone up by 8,000. So that's to be added on. Debtors, you follow the same rules as the stock rules. So this time now, if you remember, debtors has gone down by 5,000. So if debtors goes down, cash goes down as well. Sorry, if debtors goes down, if debtors goes down, cash goes up. So that 5,000 gets added on. It's the same rule as the stock. So there was a decrease in stock. Sorry, same rule as the decrease in stock. Creditors has gone down as well. Now creditors is the opposite rule to debtors and stock. If creditors goes down, you've paid them off. Creditors are people we owe money to. So we owed 61,000 at the start of the year. We owe 54,000 at the end of the year. So, sorry, I don't know why that should say decrease. So if creditors has gone down, cash has also gone down. So creditors gone down by 7,000. So cash goes down by 7,000. So that will give us our net cash inflow from operating activities. So we made a profit of 107,430, but our cash has increased by 129,230. And that gets us onto our cash flow statement. So we take that 129,230, that's our opening figure here. 129,230. All right, so our first two are return on investments and servicing of finance. Now with these, we're going to follow the same rules. We're going to take our balance from last year, and that's from the balance sheet. So any of the ones that would have anything to do with current liabilities or current assets, we do this for it. We add on the charge for the year. The charge for the year is from the statement of operating profit, the profit and loss account. So part A. And then we take away the balance at the end of the year. So the balance from this year. And again, that's from the balance sheet. So for investment income, if there was investment income due, it would be incurred assets. So there's none. So it's 0 plus whatever we received in part A was 4,000. And there's no balance at the end of the year. So it's 0 plus 4 minus 0, which is 4,000. So obviously you don't have to do that. So you can just put in the 4,000. I'm just doing that for teaching purposes. You do the same with debenture interest. So with debenture interest, you can see there is interest payable due. So you have 10.5 at the start of the year. We know that our debenture interest from part A is 22,000. So we owed 10.5 at the start of the year. We got charged another 22,000, but we only have an interest payable at the end of the year of 11,000 due still to pay. So that means we must have paid off 21,500. So if we've 11,000 due, we've paid 21,500. So that's a minus up here. So our overall position is 17.5. We do the same with our tax. So there's taxation due, 38.6. The bill for the year from part A is 43,000. Then at the end of the year, we've taxation due of 43,000 to take away. That means we've paid 38.6. And we already know we paid 38.6. Again, you don't have to do that because it tells us down here that the taxation due on the 31st of 12th 2017 was paid. So 38,600 was paid. So we put in that. Now, the receipt from the sale of fixed assets. Did it tell us how much we got? Yeah, the plant and machinery was sold for 46,000. So we're going to put that in. We got 46,000, so that's a plus. Then we bought fixed assets. So we know that we didn't buy any land and buildings. It tells us that. Oh, sorry, we did. We built an extension, and there's also the plant and machinery. So if we look at each of them, the plant and machinery, I had changed this number 286 to 236, I think. Right. Plant and machinery is 226. So if this was 226 and this is 355, well then the difference between the two of those, so between the 355 and the 236, let's check that again, sorry, 226 even, is 129,000. Now, that's the payment to acquire the machinery. I'm going to put that in as 129. So payment to acquire fixed assets 129. But then we also had an extension. It's not really acquiring a building, it's the extension. So the extension has gone from 400 up to 510. And this is where this revaluation surplus is going to come in. Of the 510, 25,000 is an increase in land. So buildings weren't increased. So in effect, this is 425 minus 25,000 gives us the buildings that weren't revalued. So we can take the 510 and we'll take away the 25,000. And that gives you 485. So now land and buildings of 400 up to 485 means that the extension must have cost us 85,000. So it's minus 129 at the payments to acquire. So all payments are minuses. So the only thing that was new in that is to remember to take off the revaluation of the land. I won't know if it's right until the very end. So the next thing I see here, and I wouldn't have room, so I'm just going to slot it in here. Oh, I will. I'll put it in. And you should just always check these with the investments. Has anything happened to investments? Have you bought any more investments or have you sold investments? So you can check the investments. And investments have gone down by 15,000. So you've sold investments. You assume you got the amount for them. So you've sold 15,000 euros worth of investments. So that money has come in. So that has to be included in your fixed assets as well. So that gives you minus 153. Dividends, right? Dividends are your same working as your investment income, debentures, interest, and so on. So we take our balance from last year for dividends if there is a balance. So have a look here. There's no balance, so it's just zero. The dividends charged for the year was 17, which gives you, and there's no balance at the end of the year, so that's 17,000. You can just check, it just says dividends paid were 17,000. So you can put in that number anyway, you don't have to do all that. So dividends is a minus number. So we'll do our sums as far as there to see if it's a net cash inflow or outflow. That is an outflow of 96,870. Government securities to finish it off. Government securities have gone from 10 to 15, so there's an increase of 5. We pay government securities, so they're assets. Then we look at our debentures. We haven't repaid debentures, we've issued debentures. So we've gotten 250 up to 300,000, so we've an increase of 50,000 on our debentures. That's money in for us. Shares have gone from 400 to 450, so that's another 50,000. And share premium has gone from 0 up to 20,000, which is 20,000. You don't do anything with the revaluation reserve. That's a non-cash thing there. So they're all pluses. So we're going to do our sums as far as there. And you get 18,130 as your increase in cash. It's a positive, so it's an increase. So look at your cash. So our last part is our reconciliation of net cash. So we go 18,130. Cash used to purchase liquid resources were 5,000. So 10,000 up to 15,000 is 5,000. That's a positive. Debentures have increased by 50,000, so that's a negative. So debentures and bank overdrafts uh, are negatives in terms of net debt. Uh, Government securities, cash and bank are positives. So just we only really we only have to really remember that debentures are negative and government securities are positive. The net debt then. So we'll just do a little working on this. So net debt at the end of the year versus net debt at the start of the year. So net debt is made up of cash, bank, and government securities as your positives, and bank overdraft and debentures as your negatives. So cash, bank, and government securities go in as positives. So we look for the end of the year. Cash is 650. At the start of the year, cash was 320. End of the year for bank is 2,100. Start of the year, bank is 0. Government securities, end of the year, 15,000. Start of the year, 10,000. There are positives. Our negatives, bank overdraft, 0 for this year. Now, that has to be, because you can't have money in the bank and have a bank overdraft at the same time. So that has to be 0. We will have a bank overdraft last year, 15.7. Again, 15.7 here, 0 in the bank. You can't have numbers in both of those. Our debentures then, 300,000 this year and 250 last year. So they're minuses. So if we do those sums, we have 255,380 and 282,250. So we slot them in. So we've minus 282,250 for last year. And then if you add those two together, you should get 255,380. Sorry, I've got that in the wrong way around. I should have put in 255,380 there. And then that's minus 255,380 there. And that gives us the 282,250. Okay, just to check to see if you're right on well, you are right because that all has to balance in case, but check to see if this 1830 is right. If we look at our bank, the amount in our bank has gone up by 0 up to 2,100. So that's an increase of 2,100. Our cash has gone up by 330. And our bank overdraft has gone down by 1570. So in effect, that's money in the bank has gone up by 15,700. If it's gone from minus 15,700 to 0, that's an increase of 15,700. So just check those sums together, 18,130. So you can check that that number is right. Just your bit of theory at the end. Explain what's meant by overtrading. So overtrading is a scenario where your current liabilities are greater than your current assets. So you've taken on too much business for the size of the business. You've basically got a negative working capital. And the problem with overtrading is you're going to run out of cash. So your current assets are less than your current liabilities. How does a cash flow statement show that a firm might be overtrading? So if a firm has a positive, very healthy profit and has a very negative cash position, so it has a net cash outflow from operating activities, that's generally a very strong indication that overtrading is taking place. So I know that was a little bit jumpy, but hopefully that's of some use to you.